In cities across the United States, something unusual has been happening. Families searching for homes find themselves outbid by cash offers. Apartment buildings change hands in billion-dollar deals. Warehouses appear almost overnight along highways. Hotels, office towers, student housing, data centers, and even single-family homes quietly move under the control of one financial giant. It is not a government agency. It is not a traditional bank. It is a private investment firm with enormous pools of capital and a global strategy. This is the story of Blackstone, the real estate empire often described as buying America. Blackstone is one of the largest alternative asset managers in the world, founded in 1985 by Stephen Schwarzman and Peter Peterson. The firm began as a mergers and acquisitions advisory business. Over time, it evolved into a powerhouse of private equity and real estate investing. Today, Blackstone manages over $1 trillion, but its real estate division is what truly transformed it into a dominant force. To understand Blackstone's influence, it is important to understand how private equity works. Firms raise capital from institutional investors. Rent increases in some markets have fueled public debate about the role of private equity in residential housing and its social impact. The firm deploys this capital to acquire properties, improve operations, and eventually sell or refinance those assets for profit. Blackstone's rise as a real estate empire accelerated after the 2008 global financial crisis. When housing markets collapsed, Blackstone saw opportunity. Prices were low, credit was tight, and many homeowners had lost properties. Blackstone moved to buy tens of thousands of homes. For example, Sunbelt cities in the southern United States have experienced rapid population growth, attracting heavy institutional investment. It converted these properties into rental homes, creating one of the largest institutional single-family rental platforms in history. This strategy was groundbreaking. Traditionally, single-family homes were owned by individuals. Blackstone introduced large-scale institutional ownership. By aggregating thousands of properties, it could standardize maintenance, centralize management, and generate predictable rental income. Over time, Invitation Homes became a publicly traded company, demonstrating how private equity could reshape the housing landscape. Beyond single-family rentals, Blackstone expanded aggressively into apartment complexes. Multifamily housing became a core investment pillar. As homeownership became less accessible for many Americans, rental demand strengthened. Blackstone capitalized on this trend. Blackstone acquired large portfolios of apartment communities in major metropolitan areas, ensuring steady cash flow and diversification. Industrial real estate represents another major pillar. The explosion of e-commerce transformed logistics infrastructure globally. Online shopping requires vast networks of warehouses. Blackstone invested heavily, assembling one of the largest logistics portfolios in the world. When companies like Amazon expanded operations, demand for warehouse space surged, increasing property values for institutional owners. Office buildings also formed a significant part of the portfolio. The firm acquired trophy assets in major cities and repositioned underperforming properties. However, the COVID-19 pandemic introduced structural changes. Remote work reduced occupancy rates and tested office-focused strategies. Hospitality real estate is another area where Blackstone made moves. The firm has owned hotel chains, resort properties, and leisure assets. Blackstone's scale allows it to weather volatility by diversifying across property types and geographies in different economic cycles. One of the most important aspects is scale. Large funds give the firm the ability to execute multi-billion-dollar transactions quickly. Sellers prefer buyers who can close deals efficiently. Blackstone's reputation and capital base make it an attractive and powerful counterparty. Critics argue that institutional ownership contributes to affordability challenges. When large firms compete with individuals, home prices may rise. When large institutions accumulate housing at scale, public concern grows. Yet, the demand for logistics and modern properties continues to attract capital. Blackstone has responded by emphasizing long-term investment, professional management, and providing rental housing in markets with high demand. It is also important to examine how Blackstone finances its acquisitions. The firm typically uses a combination of investor equity and debt. Leverage can amplify returns when property values rise, but it also increases risk if markets decline or interest rates fluctuate. Blackstone's real estate funds are structured with defined investment periods. Investors commit capital for long durations, often 10 years or more. Performance is measured by internal rate of return and cash yield distributions. The firm seeks exits through sales or recapitalizations. Another dimension of Blackstone's power is data. Sophisticated analytics identify markets with strong growth potential like migration hubs. For example, Sun-Belt cities in the southern United States have experienced rapid population growth, attracting heavy institutional investment. Blackstone has also expanded internationally. While buying America is the narrative, the firm holds significant properties in Europe and Asia. Global diversification spreads risk and captures growth opportunities in different economic environments across the planet. The firm's influence extends to capital markets through publicly traded real estate investment trusts designed for retail investors. These products broaden access to property portfolios, but introduce liquidity considerations, as real estate is less liquid than stocks or bonds. Environmental, social, and governance considerations increasingly shape strategies. Blackstone has committed capital to green building upgrades. Regulatory scrutiny is another factor. Policymakers debate measures related to affordability, zoning reform, and tenant protections. Changes in regulation can influence returns. Large firms must navigate complex legal frameworks across multiple global jurisdictions. Broad economic forces are also at play. Institutional capital has expanded as pension funds seek higher returns beyond traditional bonds. Technology is reshaping real estate management. Digital platforms streamline leasing, maintenance requests, and tenant communication. Institutional owners can standardize processes across thousands of units, creating operational advantages that support high-level profitability. However, real estate remains inherently local. Neighborhood dynamics and municipal policies continue to influence outcomes and perceptions. Institutional ownership can change perceptions of accountability. Balancing efficiency with community engagement is an ongoing challenge. Market cycles test every empire. Rising interest rates can reduce valuations, while economic recessions can increase vacancy rates. Blackstone's diversified portfolio across residential, industrial, and hospitality helps mitigate concentration risk, but no one is immune to global forces. The narrative of buying America captures attention because housing is personal. Homes are not merely financial assets, they are where families build lives. Blackstone's strategy reflects a broader transformation in capitalism. Ownership structures are shifting from individuals to institutions. Just as index funds reshaped stock ownership, private equity has reshaped property ownership, claiming that professional management improves standards. Ultimately, Blackstone's empire represents the intersection of capital markets and strategic vision. Its scale allows it to influence pricing and development. Its access to capital enables it to act decisively during market dislocations, acquiring assets when others retreat from the market. Whether viewed as a savvy investor or a symbol of financialization, Blackstone's impact is undeniable. It has embedded itself deeply into modern economies. As the future unfolds, questions remain. Will housing affordability pressures intensify? Will interest rate environments reshape leveraged models? Will shifts toward remote work permanently alter office demand? How will climate change influence property values in vulnerable regions? In the end, the story of Blackstone is about capital-seeking returns in a world of shifting economic realities. It is about institutional power and vision. As long as real estate remains a cornerstone of wealth, firms like Blackstone will continue to shape the neighborhoods and networks that define the landscape.